So we're going to now go down into the three businesses and a little bit on the holding company, and then all wrap up. Again, the intention of what we've done to date is to try and help you all worry less so that you can be more present for the deep dive into the businesses. Now, we are going to go down into in the fiber business, the three other variables as I described, but I want to start with a little bit of an overview, a little bit of the fiber meta. And I'm going to start with a quick story from the UK because, the fiber market globally really contains some mysteries for me and ones I'm trying to understand. And what got me down this road was a headline from a company that was, I'm deep in the securitization process at this point. And I've already been to structured finance in Vegas, and I've met with all the insurance companies. I know what we're sort of looking at. I know what they're digging into, and I see this financing. And so, I reach out to some bankers who might have some familiarity with it to try and understand it. And it doesn't make sense to me because, the bulk of where we're building, we're the only fiber provider. There is a little bit more overbuilding specter than there's been in the past, but, we still expect the vast majority of our fiber network will be the only provider. In the UK, it's a very different story. In the UK, you have Vodafone in 2/3 of the country with an open access network. You've got BT in 2/3 of the country with an open access network. At its simplest, think about those two networks overlapping in 1/3 of the country. So now you also have what they call altnets. Altnets are companies like the one I showed you, Netomnia, who are also building fiber. So if you are one of these altnets in the UK, what you're doing is you're building in the least dense places with one other fiber provider, and in the most dense places with two other fiber providers. So I've just gone through this experience where I've understood the way that lenders are underwriting these deals, how they're thinking about it, what their variables are. This made no sense to me. So we talk about this, I dig in, and I literally have a conversation with a guy, where I'm saying, what's the terminal take rate of fiber? What do you mean? Well, what's the market share going to be for fiber at the end? What do you mean? Well, there's coax in the UK, right? Yes, there's coax on my street. Okay, well, what's the terminal take rate for coax going to be? Well, the terminal take rate for fiber is going to be 100. And so what lenders are underwriting in the UK is essentially coax going out of business. I shared with Marlena, who's on the board, and Jan, who is newly in the fiber business, which I love because now he's going to have, all of the disclosure challenges that I did. So, and I'm happy to have blazed the trail. I shared an article with them this week where that was the debate. What's the terminal take rate of coax going to be in Germany? Is it going to be 0? Well, I can tell you that in North America, the terminal take rate of fiber, we talk about 50%. We're seen as high. We are seen as high. So for whatever reason, and certainly the markets can be different, but I don't think they're that different. The terminal take rate of coax in the US as being underwritten by, the biggest lenders and the biggest private equity providers is high. It's 40, it's 50, it's north of 50%. And I think that's very important. Somebody's going to be right here. I like the fact I share all this story just to share with you, that we think our penetration is kind of sort of conservative. That's big point number one that I want to lay out in the meta. The second is that there really is a lot of partner activity. We have our partnership with Ubiquity. A lot of you will have seen the AT&T and BlackRock joint venture where they're building outside of AT&T's existing footprint. In the top right, you see Meridiam, which is a French utility. They've built in Bloomington. They're going to be building in other cities. They've committed billions to the US market. You see Intrepid, which is a joint venture between Brookfield and Brookfield stood up a wholesale provider. They announced T-Mobile as their first tenant on a network a couple of weeks ago now. There are others. Tillman's got something that's supposedly out there as well, the big tower company, and more. There are not that many tenants for these markets. So I lay this out there as a question that we have. You just see here probably $10 billion in capital that's going to go into this cycle. I don't know where the tenants are. I don't think that's going to mean better rates for us, but I do think it might mean some better terms. We really do think about these businesses, these pieces of the business severally. I've always talked about every fiber network having three pieces: capital, construction, and ISP operations. The first two are around for 18 to 24 months, and the last is around for 100 years. We have been able to stand things up in a way where what we do in the partner side and what we do on the organic side is independent. I identify it because it's the type of thing where the next year and the next 2 years, this really could have, important bits of revectoring. And the third thing that's mimetic, that's out there, 18 months ago, when the stock price was at $90, fiber was not accepted as the unquestioned winner in telecom. It was seen as a strong story. It was seen as more interesting than it had been a couple of years ago. But now fiber is so accepted as the winner in telecom that in North America, they are now questioning whether a mobile provider can survive without fiber. That's remarkable. That is such a sea change. And by the way, when you see T-Mobile acting as a tenant on the Intrepid network, what you see is their confirmation of this fear. T-Mobile does not necessarily play nice with the other children generally. They don't. This is them partnering. So, I think that I highlight those three big questions that are out there in the meta. And then, I just kind of want to, we've now gone through a big syndication process. We've talked with lots and lots of external parties. This is a bit that's kind of clipped from the syndication sim. But, what I've come to now feel externally validated about is that we have generally higher penetration rates. We have generally lower churn rates. We have generally more efficient operations. One of the really interesting ways that manifests was how quickly we were able to execute against the syndication. We had multiple junctures where the bankers who were supporting us expected us to take some few months getting back to them with a technical requirement, financial technical requirement, and we'd have it in days or weeks. I'm thrilled that I experienced that external validation around those penetration rates, higher, churn, lower. operations more efficient. That operations more efficient, of course, is going to track down to net margins at scale. And then, you know, the last bit there is around build costs, and that's what we're going to talk about in a second. The last point, I think the last point, yep, that I'm going to make before I turn it over to Jason, you know, again, surprising for us, the fact that we have a more distributed footprint than a lot of the mid-market builders our size was really seen as a positive. It was seen as diversification. You know, the bulk, when you see me present a possible outcome, a plan that I did, which is a fully baked plan, and I want you to know, we know what we're doing for the next 12 months. We're pretty certain what we're doing for the next 24, and we've got a good view beyond that. But you know, obviously, we cast that every quarter. This footprint, this distributed footprint, the vast majority of what you saw in the plan that we presented is in these footprints. So it's not about opening up some new territory, and I think that's very important.